Hi there, welcome to Kneppy Invest. In today's video, we are going to be focusing on a company called Hansen Technologies, primarily looking at their financial year 22 results. Now, Hansen Technologies is a software company providing billing solutions and services for energy, utility, and communication companies. I probably would classify Hansen Technologies as at least a solid company on the ASX, if not a high quality company, definitely not a low quality company. And because I would classify this company as high quality company, it all comes back to valuation. What is the valuation of this company right now? If I see really good value in a high quality company, I will take a position in that company even if the share price trend is down. And that's quite a bit different than a low quality company. And for low quality companies, it's all about the trend in the share price. I don't really care about the value. For full disclosure purposes, I am a shareholder of this company. Now, my conviction and confidence in this company is probably on the low side, just because even though I would classify Hansen Technologies as a quality company on the ASX, the growth in the company isn't quite at that level that you would prescribe to the highest quality companies on the ASX. So if I do find a higher quality company than Hansen Technologies, I am willing to sell out of this company and take a position in that other company. But it's a solid company. And I think if you do hold Hansen Technologies for the long term, so I'm talking about over 10 years, maybe even 20 years, I don't think you can go all that wrong with this company. Another way we can determine the quality of the company simply just by looking at the chart. For low quality companies, and just pick any low quality company, a mining company, and look at a long-term chart, you'll see pretty large fluctuations in the share price over time. And the reason behind that is a lot of low quality companies are cyclical. Now, that cyclical nature that you do find in charts of low quality companies aren't evident in high quality companies. And for the majority of high quality companies, you will see the chart and the share price in the chart go from the bottom left to the top right. That's definitely true for Hansen Technologies. If we go back to 2012 here, so this is the weekly chart, 10-year weekly chart, the share price was around 80 cents. The share price now is $5.20. But if you take a closer look at the weekly chart here, there are long periods of time the share price is definitely in an uptrend, but there's also long periods of time when the share price does absolutely nothing. Now, a period of time when the share price of this company was in a well-defined uptrend, probably the best uptrend we have seen for this company was from the start of 2013 to about the middle of 2016, when the share price went from 80 cents to $4.60. If you bought at the peak in 2016 at $4.60, it took about 5 years before you were back in the green. So you would have had to be a very patient shareholder of this company not to sell out, because a lot of investors, if they buy into a company, the share price falls, they automatically think that company is a dog stock. So there would have been a few shareholders who bought into this company in the middle of 2016 who thought this company was a dog stock. And then in the start of 2021, we saw a breakout in the share price. Share price went from about $4.20 to $5.60 in 1 week. So no doubt there was some good news in that 1 week that propelled the share price. And since that week, at the start of 2021, share price really has done absolutely nothing. In fact, the share price has gone sideways from that week to the current share price. And actually, when you do look at Hansen Technology chart here, you probably could argue with me, particularly if you're on the technical side of the investing hemisphere or universe, whatever you want to call it, that even for high quality companies, trading can be beneficial. Because if you're trading Hansen Technologies, you probably would have owned this from the start of 2013, whenever it broke out, to about 2016, before it started going sideways. And then you didn't really have to hold this company for about 5 years because the share price was going sideways. And then maybe you could have taken a position in the start of 2021 when the share price broke out. But even if you did take a position then, the share price has done absolutely nothing. So you could argue, or use this chart to argue, that even for high quality companies, trading is and can be a pretty good investing strategy. And when I say trading, I'm talking about technical trading, just looking at technical signals, that sort of thing. Anyway, let's have a look at the financial year 22 results for Hansen Technologies. Now, the share price the last time we looked, and this was on the 30th of November, just after opening, the share price was $5.17, which means the markup of this company was just over $1 billion. That's on revenue of $296.5 million, profit of $41.9 million, operating cash flow 85.2, and free cash flow 62.6. Now, be warned, the way I calculate operating cash flow and free cash flow is a little bit different than what the company will report, because I don't I take away or minus leases from the operating cash flow, and also leases and capital expenditure from free cash flow, but I also exclude research and development from free cash flow as well. So that might be a little bit different from the way that companies will report their operating cash flow and free cash flow. So most companies will only minus the capital expenditure from operating cash flow to calculate the free cash flow. So just be aware that my numbers here will be a little bit different than the numbers that Hansen Technologies report, that other websites will report as well. Now let's have a look at the history, revenue and profit and margin history for Hansen Technologies. Now, I do like to look at the historical trend when it comes to revenue, because revenue growth is one of the best predictors for future outperformance of a company. Research has been done on this, so I just want to say that again. Revenue growth is one of the best, if not the best predictor for outperformance of a company. When I say outperformance, I'm talking about share price and valuation. So let's look at the revenue growth and revenue per share growth of Hansen Technologies. Revenue has grown from 56.5 million in 2012 to around about 300 million in 2022. Now, one little concerning thing about Hansen Technologies has been that revenue has gone sideways over the last 3 financial years at around about 300 million. In fact, in financial year 22, revenue did decrease. But if you do calculate the revenue per share growth, and I prefer to calculate the revenue per share growth over the past 10 years, that has grown at 17% per year, 5 years, 9.5%, and the last 3 years, 7.8%. The other thing I've included here is profit, which is in the pink down the bottom. And you do see profit generally increasing over time, but profit did decrease from 57 million last year to 41.9 million this year. And one of the reasons why profit did decrease quite significantly from last year to this year, even though revenue didn't increase all that much, is because of a decrease in margins. So gross margins decreased to 38.5%, and operating margins down to 19.6%. But overall, the main thing I'm looking at here with margins, I don't want to see any significant general decrease in margins over time. We don't have that with Hansen Technologies. I would prefer margins to be at least increasing with time, or at least, probably the best way to put that, at least going sideways with time. So we probably can say that with Hansen Technologies, they're at least going sideways with time. But there is that possibility that if Hansen Technologies increase their revenue next year, they might be able to increase their margins. It's up in the air at this point in time, which means their profit will be significantly higher than 41.9 million. So that's the main thing I'll be looking for in financial year 23 with Hansen Technologies, is focusing on their margins. Now let's have a look at Hansen Technologies' balance sheet. I always like to look at the financial statements for all companies just to see how the company's health is right now. And to really get a good gauge of the company's current health, the balance sheet is a good place to start. Typically, I start at the cash flow statement and then work my way backwards. That's the way I do things right now, but I always have a look at the balance sheet. So a lot of things I'm looking at here are comparing total current assets to total current liabilities. So that's a current ratio, I think it's called. And right now, that's okay for Hansen Technologies. Current assets, 149.3 million. Total current liabilities, 81.5 million. This company has plenty of cash, not 59.6 million. Receivables, 56 million. Now, something interesting here is the receivables fell a fair bit from last year to this year. So if you do see a decrease in receivables, that's actually a cash inflow. If you see a significant increase in receivables, a significant increase in inventories, that's a cash outflow, and that can have an effect on the cash flow statement and the operating cash flow of a company. So won't be showing you the operating cash flow or the cash flow statement in this video. Next thing I like to look at is stuff like borrowings or loans. So last year, this company had $117.5 million in current liability borrowings. And this year, that's zero. But in the non-current liabilities borrowings, they have $87.9 million. So it does look like in the past year, they have brought their borrowings down, or the loans down, from 117.5 million down to 87.9 million. Another thing I look at is total equity. Total equity increased from 288.5 million to 313 million. So just by having a quick look, and the other thing is have a look at payables. That's actually decreased from 37 million to 23 million. That's actually a cash outflow. So that will have an effect. A significant decrease in payables will have an effect on the cash flow statement. But overall, this is a pretty healthy balance sheet. So I have no doubt that Hansen Technologies will be here for the next few years, unless they get bought out or something like that. I have no concerns with the future viability of this company just based off this balance sheet. One thing I like to look at, particularly with companies who have quite a few divisions, segments, who have operations around the world, is disaggregation of revenue in terms of products, divisions, verticals, geographic regions, those sort of things. So this was in the notes of their financial statements. They've broken down their revenue into products, into verticals, into geographic segments. So they also define what the products are. For instance, license, support, and maintenance is billing application license, support and maintenance services delivered as a part of the total billing system solution. Services, provision of various professional services in relation to customer billing systems and IT outsourced services covering facilities management, systems and operation support, network services, and business continuity support. But when you do look at the breakdown in the products, there's a nice little, it's not quite even, but $165.6 million of their revenue is in license, support, and maintenance, $121.9 million in services, and only $784,000 in hardware and software sales. If we look at the different verticals, so this is talking about energy and communications. There's a nice evenly split between those two verticals. $141.5 million of revenue in energy and $147.4 million of revenue in communications. And then they break down the revenue by geographic areas. APAC, which I assume is Australia Pacific, $49.9 million. Americas, $66.3 million. EMEA, which I assume is Europe, is $172.8 million. So the majority of their revenue comes from Europe. And I just had a look at what EMEA is, and it's Europe, Middle East, and Africa. And just by assumptions, and I do know making assumptions means you could be making an ass of you and me, I would assume that the majority of that revenue in EMEA is in Europe, not in Middle East or Africa. Now on to the valuation metrics for Hansen Technologies. And because I do consider this company to be high quality company on the ASX, valuation matters. Now, when I say valuation matters, I just don't look at the P ratio, and for Hansen Technologies, that is 25.1, and think that is expensive or cheap. I need some reference here in terms of Hansen Technologies. And the first reference is the historical values as this company usually trades at. And say P ratio for the last 10 years has been less than 15. And now if it's 25.1, that means this company is historically expensive to what you usually find for this company. Now, if the historical P ratio for Hansen Technologies is say 30, 35, 40, and it's currently 25.1, it might be cheap now compared to historical ranges. But there could be a reason behind that. Maybe the market is expecting the growth in this company to seriously slow down, and that means a P ratio that is lower than in the past could be justified. So the current P ratio of Hansen Technologies is 25.1, price to sales ratio 3.5, price to operating cash flow 12.3. I would consider that to be on the low side from what I know of Hansen Technologies. And I also did a reverse DCF. I like doing reverse DCFs. I very rarely do DCFs, but I do a lot of reverse DCFs. I just want to know the growth this company has to exhibit to justify the current valuation, and that growth is 9.3%. So if that reverse DCF for this company was 0%, I would know straight away this company is trading at a discount. If the reverse DCF came out with 100%, I would automatically know this company is trading at a significant premium. But I do believe that this company can grow their operating cash flow, free cash flow at 9.3% per year over the next 10 years. I definitely think that is achievable for this company. But I might want a little bit of a margin of safety. If I see that reverse DCF get down to, say, 5%, 4%, you're building in a margin of safety. You're decreasing your risk. You're increasing your probability of success if you invest in this company. So that is how I think about valuation metrics. I look or compare the current valuation metrics to historical ranges. Also look at the potential for future growth of the company, which is hard to do. So even though the company might have grown at certain rates in the past 10 years, doesn't mean they're going to grow at that rate in the next 10 years. So it's a complex way to look at valuation metrics, but this has worked for me in the past, and hopefully it will still work for me over the next 10, 20 years. So let's have a look at the historical price to free cash flow of Hansen Technologies over the past 10 years. So we compare the price to free cash flow, which is around about 15 right now, a little bit higher than the price to operating cash flow. So I had a look at all the P ratio historical, also looked at the price to operating cash flow historical. I took this particular graph from Guru Focus. So right now at about 15 is on the low side for this company. And in fact, any single time the price to free cash flow of Hansen Technologies gets below 12.5, more than likely over the past 10 years, you were buying this company at a cheap level. It's only happened a few times in the past. In fact, the last few times it's happened has been post COVID-19. But the price of free cash flow of this company has been as high as 45, almost 47.5. And that was back in 2018. So that's sort of a level you might consider this company to be expensive. But definitely a price to free cash flow of 15 is not expensive for Hansen Technologies. You could even argue that is actually cheap for this company. The first thing I usually look for when a company does have their AGM is to look at any guidance the company has provided to the market. Most companies will provide some guidance or update their guidance, that sort of thing. And Hansen Technologies is no different. And the reason I look for guidance is because the market is always forward-looking. And if the market sees any sort of significant change in guidance, they will react. And I have seen some significant share price increases or decreases based off the AGM. And we are now towards the end of the AGM season. We have seen some significant re-ratings in company share price downward and upward because of the AGM and changes in guidance. Hansen is no different. They have given us some guidance, fairly limited amount of guidance for financial year 23. So they do expect financial year 23 revenue to increase between 3 and 5%. They also gave us an EBITDA margin, which was plus 30%. And to be fair, no, actually I'm not going to be fair to Hansen. I would prefer them not to provide EBITDA margins. I don't like EBITDA margins. I prefer operating margins, gross margins. I prefer profit, cash flow. What are their expectations in relation to that? And most companies, for some reason, are obsessed with EBITDA and EBITDA margins. But the market didn't really react all that much to Hansen's AGM. So the market or the company didn't provide any new information that surprised the market. That's why we didn't see any significant reaction from the market. Now, even though I am a shareholder of Hansen Technologies, I have been thinking, should I be a shareholder of this company? Because the share price is really not doing anything right now. And I could put my work buying a company whose share price is in an uptrend and take advantage of that. So even though I do like this company, I think there is pretty good growth ahead for Hansen Technologies over the next decade. With the share price not really doing anything over the past year, there is an opportunity cost there. So this is one thing I'm thinking about. So I've always bought into companies with a view of the next 10 years, next 10 or 20 years. And I don't care about the short-term fluctuations in the share price. But that could be a mistake because maybe I could be putting my money to better use. That's just what I've been thinking about over the past few weeks. And Hansen Technologies is one of those companies I've just been thinking, should I be owning this company right now? Should I have this company in my portfolio, even if I think the company right now is a little bit undervalued because the share price is doing nothing. Share price is not in an uptrend or a well-defined uptrend right now, but it does look promising. Over the past few months, the share price has moved up, but the share price keeps on drifting down because if you look at the highs, the peaks in the share price, each successive peak is a little bit lower than the previous one. Even the lows, each successive low is a little bit lower than the previous low. So if you just look at the weekly chart, you might say the share price of Hansen Technologies is in a very slow burning down trend. I plan to continue doing this financial year 22 result video series for a while yet, even though we are approaching the end of the year, which means companies will be thinking about the half year or full year results that they will release in February. And maybe once we get into February, March, maybe I can start doing half yearly and yearly result videos. Anyway, the next 5 companies I'll be looking at include LaserBond, Wesfarmers, Brambles, and 2 iron ore companies. A fairly large one called Fortescue, so most people have probably heard that, and Phoenix, which is a smaller iron ore producer, and that has provided me, I am a shareholder of that company, that has provided me with absolutely awesome dividends over the past year and a half. I think the last dividend was something like a yield of maybe 20 to 25%, but the share price of that company really has been doing nothing. It's all about the income. If you have any suggestions about companies you would like me to feature in the financial year 22 video, just leave those suggestions in the comment section. Now, I can't guarantee anything, but I'll see what I am able to do. That's all I have for this look at Hansen Technologies financial year 22 results. If you have any questions about this company or any other company on the ASX, please leave your thoughts, your questions, anything in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day.